Okay, welcome back. We've got, 30 minutes to go for the pre-open session. And Dipan Mehta is now joining us, Director at Elixir Equities. Dipan, great to have you with us here. Thanks very much. Once again, the flavor of the market yesterday was in PSU Banks, right? Even the laggards are catching up on how. I mean, I was looking at Punjab and Sindh Bank. Old name, but 80% this month. It's caught up with what others like Union Bank, IOB, PNB, Bank of India, and these were all big gainers yesterday. So it's got momentum with it, and it's got the prospect of earnings improvement as well. What would you do, and which names do you like?
Yeah, good morning, Prashant, and thank you for having me on your show. I think we are seeing a very good trading rally in PSU Banks. And I had said earlier as well that I think the next 6 weeks or so is exceptionally good for PSU Banks. They should report very good numbers for the December quarter. And this entire process of expansion of their price to earning, price to book multiple, that is well underway and maybe has some more legs to go up as well. So generally positive, but remember it's a trading rally. And at some point of time, once investors realize that growth may not be as much as the private sector banks, and once the NPA cycle starts to pick up, you may see trouble spots emerging over there. But for the time being, I think next few weeks, months looks very good and exciting for PSU banks. And you can buy any of them. I think they'll more or less move in sync. And even the valuation ratios are in a very narrow band. And one bank is not in any case significantly better or worse than the other one. They are more or less the same type of structure, as well as same type of lending standards or NPAs or growth rates as well. So I think if you're holding PSU banks, then this is a great time to remain invested. And you could look at some of the smaller PSU banks, like you mentioned, Punjab and Sindh Bank, maybe Union Bank of India, which are even on the cheaper side as compared to some of the larger PSU banks.
Okay. Dipan, hi, good morning. I wanted your thoughts on Paytm. There's the buyback board meeting today. So from an investor standpoint, what does one expect and how are you looking at the stock now?
Good morning, Sonia. I think we are seeing positive news flow coming through from Paytm time and again. And it's not just the buyback, but the operating numbers also, which they disclosed for the last month, were exceptionally strong. And clearly, I think we have a tangible bottom in place for Paytm. And the buyback certainly will strengthen this particular support zone, which it is at present. And it's a smart move on the part of the management, given that they have the liquidity. It's sending the right signal to all the investors that cash burn may not be as much as they're expecting. The fact that they're utilizing the money to buy their own stock. And also, I think it sends a very good, I would say, impression that they are now really focusing on their capital allocation policies. And you will not expect them to do any wayward merger acquisition or spend excessively on any particular feature or any particular business which may lead to losses. So I think it's gradually becoming a more and more responsible and investor-friendly company. And I think the street welcomes that. And certainly you'll get rewarded in terms of better returns going forward.
Okay, all right. Hi, Dipan. Morning. I wanted to ask you about Tata Motors. They're saying they're going to be divesting their stake in Tata Technologies. So that's good news, right? Some money will come in. What's your view on the stock, Tata Motors?
No, I'm not interested in Tata Motors. I'm interested in Tata Technologies. And looking forward to the IPO. Hopefully, it'll be at a reasonable valuation because it will be compared to some of the other IT companies which are trading at reasonable valuations. And I don't know much about the company, but the fact that the Tatas have kept it separate, standalone, and not merged with TCS, as they have done with Tata Elixir, I think it should have an excellent business model and should be focused on certain very exciting verticals where there is a good growth momentum. So if the valuations are reasonable, I think minority shareholders will have a good opportunity to invest into a good quality software company where it is assured of captive business.
Okay, so we'll wait by for that. But Dipan, you're not interested in Tata Motors, not interested in autos at all, or only Tata Motors?
No, we are very positive on all the four-wheelers.
Okay.
Right from Ashok Leyland to Maruti, M&M, and in two-wheeler space, we've spoken about Eicher Motors considerably. It's just that when you buy Tata Motors, the whole complexity of managing your portfolio increases significantly. There are just so many moving parts and so much of analysis and study and watch which has to be kept when you buy Tata Motors that it drains you. It takes up a lot of time in terms of monitoring other stocks. So that's the reason why we avoid Tata Motors completely. There's Jaguar, and then there is the EV space, and there's commercial vehicle and local passenger vehicle, and then there's the financing business. So it's a very complicated company, and its accounting policies also have come under fire in the past in terms of its hedging. And even in Jaguar, it is operating in so many markets with very diverse volume trends. So end of the day, when you have simple, nice, clean businesses to invest in the auto sector, I think our preference should be for that rather than Tata Motors.
Got it. All right, Dipan. The other sector that's not met your fancy too much is the cement stocks, I think so. But we have to focus on a big corporate story that broke yesterday. So Dipan, we'll come back to you. But getting to that, late in trade yesterday, Dalmia Bharat, they have acquired the cement, clinker and power plants